Good morning, everybody. Mike Vacchi, Princeton Trader here with your Tuesday morning pre-market webcast. Okay, daily chart of the ES. Yesterday's trade was really a nothing. We traded essentially between 15.15 and 15.19 for the entire session. We closed at 11:30. We opened back up. We have traded as high as 15.1975 in the overnight and as low as 15.1525. So that four-handle range is holding up. Really, not much has changed since yesterday. If you didn't catch yesterday's webcast, I would catch it. It's certainly going to be longer than this one. Just discussing where we at and where we are going. And very briefly, it talks about how we continue to have morning dips or dips during the day that continue to be bought by dip buyers. And until the dip buyers can be turned away, this market's going to continue higher. Nothing has changed with the 1528 to 1530 potential reversal area that I gave you yesterday. Nothing in the Monday trade changed my view on that. But that's all in yesterday's webcast. So I would encourage you, if you took yesterday off, and I hope you did, go back and look at that webcast and this one as well. For today's trade, you've got a pretty key area between 1516 to 1517. Daily and 3-day pivots are locked up at the 1516 level, and that's going to be a real point of control today. If we dip below that area, and the dip buyers come in to buy that dip, if that double area at 1516 to 1517, if that zone can be established as resistance, and then the bears can push to new lows, that would be an opportunity for them to turn the dip buyers away. Because, as I said yesterday, what you don't see in anywhere on here, and you could argue, with the exception of these few days that had everything to do with the fiscal cliff, at no point in time have the bears ever followed through, either on a daily basis or on an intraday basis. And the byproduct of that is it's really, really easy to be long right now, but the longs are very nervous up here, as I said yesterday, and that's why you're getting this two-sided trading. The longs are nervous when we get up to these rarefied areas up at up around 1522, and that's been kind of established as an upside, at least short-term resistance area. But at the same time, when the bears start to push and they get down to an area like 1510, they get nervous and they want to take whatever profits they have and they cover. The dip buyers come in, and that creates new highs, and that has been the dynamic of this entire move. Weak shorts covering, and then you get some buying into it, and we do new highs. So until that entire dynamic changes, you're not going to see any real change in the market. The last thing I'll mention before I go is that the 45-day pivot is 49 handles from peak price, and that's to start the day. And that's key because you're starting to see an area of around 50 handles as kind of the baseline area of stretch between that pivot and the peak price. That's nowhere near 60, 70, 80 handles where we've seen it in the past, but as a baseline, it's getting pretty established as overbought. Whether the market decides to care, that's a whole other issue. But I'm still eyeing 1528 to 1530 up in this area here. If we get that kind of a move on some volume and we get some ticks there could be a little bit of a washout and a move back to the 20. Everybody wants to trade down to 1460 to 1480. Everybody wants it. But I think what we may get, at least initially, is simply a trade back to the middle band, around 1505 half. And if the middle band is established as support, that gives the potential for the bulls to do new highs. And what I tell all my friends that are bullish and want the market to do, these big numbers, 1550, 1600, 1625, is then you need to be rooting for a pullback more than the bears do. Because we're not going to go to these levels unless we can get some kind of an established higher low between wherever the top ends up being and 1382 quarter. If the market were to pull back to the area of the 100 or even to the area of the 50-day moving average, or ideally to the 200 moving average, and bounce, that would provide the kind of fuel that could really take you above 1600 if you were going to do it. But that's very far down the road. But for the people that say we're going straight up to those areas, I think that's nonsense. We have gone straight up off the floor from 1340. And you're simply not going to have the fuel or the conviction to push the market much farther above 1530. Okay, everybody have a fantastic day. Mike Vacchi, Princeton Trader. I'll be back tomorrow morning with another webcast. Fired up to be back from vacation and on the desk. Trading well, everybody.